Hello everyone and welcome to the newly established channel Technically Analyzed for Stock Technical Analysis. In this video, I will be going over the technical analysis of Gevo Inc., a renewable chemical and advanced biofuels company that develops low to zero carbon emissions gas, jet fuel, and diesel. Since I focus on the technical analysis, I will not be discussing the company's fundamentals in this video. Before we get started, I would like to inform you that I'm not a professional technical analyst, trader, investor, or financial advisor. I'm actually a professor of computer science who just recently started to trade and invest. So this video is my limited and personal analysis of the stocks I'm currently investing in and trading. So please use the information here with caution and best to use it to confirm your own analysis and not as a guide for your investment decisions, which can be very risky. Alright, so let's get into it. I'm using Webull for trading and investing since it's commission-free and easy to use. I also like their charting tools and I'm leaving a link in the description below for the tool if you are not familiar with it. I'm not affiliated and I do not get anything out of this if you create an account with them, which is free. You may also get free stocks when you create an account and deposit a certain amount in your first deposit. So read the instructions carefully so you do not miss the chance of getting these free stocks. Now, since this is the first video of the series of technical analysis videos of Gevo, I think it's only reasonable to step back a little bit and spend a few minutes on the history of the technical analysis of the Gevo company. Because I believe that this is relevant and will provide some useful context. So if you look back when the company was established in 2011, and let's go back here, so that's in 2011, and since then, once the 50 EMA dropped below the 200 EMA, it only crossed it one time briefly in 2012, and that was it. Since then, it never crossed that line. Alright, they get closer, but then it drops again. And every time they get closer, you will notice there is some kind of a spike here. Alright, or a rise in the price, but they never crossed. Here they got a little bit closer and they kept going, and let's go to more relevant in the last couple of years. So if you notice here in 2018, they got closer, right? Relatively close. And then you will notice there is a spike, but also there was here a reverse split. But then when they went all the way down here, you will notice that they got very close here, right? And the price was almost, or the price almost doubled. All right, and that could be the impact of having the earnings here, even though it wasn't like a really positive surprise, but that was the way the market reacted to this. And then it continued to drop. All right, so it continued to drop, and you will notice here that they got close again in August this year, right? And then only recently they crossed. All right, so that cross here that happened here did not happen since 2012. All right, so that's significant. Why is that significant? Because this is what we call the golden cross. And the golden cross is important because it shows that in the recent 50 days of trading, the price went higher than the last 200 days, with more weight given to the recent days price action, of course, because we are using the exponential moving averages instead of the simple moving averages. All right, so that is something important because the golden cross is kind of a big thing, but also keep in mind that not every golden cross will lead to a rally, but at the same time, every rally is possibly started or potentially started with a golden cross. So for example, here, if we go quickly and have a look at Apple, you will notice that here's the 50 EMA and the 200, right? So we have here an uptrend, and then you will notice that this happened starting from here when that cross happened. All right, so that was dropping and then that cross happened, and since then it's in the rise. Now here there is another leg here, and you will notice that again it's 50 EMA crossing 200 EMA, and that goes all the way up here, and so on. All right, so that's why it's important. That's why we are looking for that, but it's not a definite indication that it has to rally, even though like relatively the price is actually moving in an uptrend recently. All right, so we will get back to the moving averages because they are kind of important here, but for now let's notice here that during the downtrend, all right, there were several support and resistance levels that were created, but one of the most important ones here that we can see here as it drops, and then notice here that at the 179, all right, almost 1.8, that was tested twice and rejected, all right, and then it started to move slowly towards it again, almost close here, and then drop again, tested, it actually respected that for a while, and then it cracked, and this is when it dropped a little bit and then it went back up again. All right, so that is something we will notice here, and then it goes up all the way to this 3.8, and then it drops hard, and then it goes below that level. So that level tells me this tells me that this level is very important. All right, it was respected for a while, it was tested a couple of times, and it held, and then after that recent rise, or that rise, it dropped below it, and that's it. All right, now after it drops below this, we will notice here that this is a trend, and then we will talk about this. So that's why I'm highlighting that level, because it seems to be very important at this point. All right, so that is, so I'm going to call that level the 1.9, because it ranges from 1.7 to 1.9, which is the range where it drops below a little bit, above, and so on. So that's not definitely 1.9 or 1.8. It's just in that range. All right. Also, this is an important level, as I will talk later on. This is where we are at right now. Couple of things also related to the history. It keeps dropping, and then on the 20th of August, the company announced its most significant contract ever, which has exceeded $1.5 billion in long-term revenue contracts after entering into a binding renewable hydrocarbons purchase and sale agreement with Trafigura Trading. During this day, Gevo actually traded for almost 1 billion volume, or a volume of 1 billion. All right, so that was a crazy day. It traded on 1 billion, and this is where that spike happened. But then, now this is where the 1.9 level appears again. The level, it went all the way up to 2.19, and then it dropped and closed below the 1.9 level. All right, so that's again, this level is showing to be very important. All right, so what happened on that day is that the company wanted to capitalize on that exposure, and after a very long time of being trading under $1, the company wanted to capitalize on this, and what they did is that they made an offering at that night. All right, after the market closed, which was not nice, and this is where many bag holders were created in this move. Now, at the same time, even though it's not nice, but it's also kind of understandable. All right, so this is where the company started to, the price continued to drop, but also it was holding an uptrend. All right, so it was holding an uptrend, and of course we are in a hindsight now, but people didn't see that. All right, at that time it was dropping, and then it goes up a little bit, and so on, and it was actually forming what we can see here is basically I think we can call it a pennant, right? So that can be considered a pennant. So that is, if we draw the other trend line, maybe from here and maybe adjust later on, you can see here, this is a pennant, which this pennant ended up with that spike that we have seen, which went all the way up to 287, and then since then it's retracing, as we can see here in that downtrend. So that is the history of the Gevo's price action. So what about the present and the future? All right, so let's have a look. So since no single technical indicator is a perfect indicator or 100% indicative, I will be using multiple indicators together to make sense of the price action of Gevo. The nice thing is that I draw all of them independently, and then I try to see if there is some kind of confirmation from one to another, which is nice. The first primary tool that I'm using is the Pitchfork tool, or also called the Andrews Pitchfork, the one that you're seeing right here. Alright, so the Pitchfork tool shows the trend, which is indicated with this median line, and then it has two support trend lines, these two, which we were going to call the inner and the outer, and then it has also two resistance trend lines, which are going again called the inner and the outer, just when we talk about them. And the concept is that the price action is always trying to get to that trend line by fluctuating below and above, as we can see here. Alright, so what we did here is that we drew one of the pitchforks for that recent trend line here, alright, going down. And even though it looks straightforward in the concept, it takes some time and experience to actually draw and choose the points that indicate the trend line. So here we are seeing here, after choosing the pivot points and drawing this channel, we will see here that it's actually respecting that channel, all right, and then it traded here and then up again to the outer level, down again a little bit below the inner resistance, and then it broke out of this, hit the outer resistance, dropped again, and then slowly moved towards breaking that outer resistance again. Alright, now after doing this for a while, it dropped again, but this time it didn't go all the way to the center line, alright, or the median line, which is, or even the inner resistance, which is nice. This means that there is some kind of buy pressure that is changing the market sentiment. Now, after moving sideways for a while, this is where that contract came, and this is where it had that spike, which took it out of that downtrend line. It took it actually over the 50 and the 200 EMAs, and even the 1.9 significant level that we were talking about. All right, and then this here indicated that there is some change in the trend, and this is where I draw another channel or another trend line that is indicating of this, and this is where the new pitchfork is created. Now notice here that it went all the way to the bottom, and then it spiked, and then it closed at the pitchfork. Notice here that it was perfect here, that this is where it closed, even though this is not the pitch, or sorry, it's not the pivot point that I chose. So these are the two pivot points, and it's very interesting how this ended up to be the line which decided where this stops. So that's nice. That is when I said that the indicators or the charts that we are drawing are actually showing that the chart is actually conforming to this. So now it dropped again towards the center line. It broke the center line, dropped all the way down to the inner support line, a little bit below it. It held it for a while, then below it again, and then it didn't go all the way back down to the outer support line, which is good. And then it spikes again and goes all the way to the above the resistance, and then it goes back down here, and then it held this one here. And this was a little bit tricky because it dropped, right? So this is where it opened. It dropped all the way here, right? Which we can see here is the 5 EMA, right? Which means the exponential moving average of the last 5 days. So it respected this one, and then it went all the way back up here, and then it closed here. Now that's very interesting because it closed under this or at that level, right? Which here then the next day it goes all the way up here. So that was tricky because we thought like, okay, it's bounced back up or back out of this, and now it's actually going to break out again, but it didn't. All right. And also the next day was again confusing because it formed another candle that seemed to be like a hammer, which shows like rejection in the price. There is a pressure of buying, and that could also indicate that, okay, we are still in that uptrend here, but it wasn't. All right, it dropped again. All right, so it dropped. It respects the 5 EMA for a while, and then it dropped below it. Then it respects the 9 EMA. All right, even though it went back all the way down to test almost the 20 EMA, and then it went back up to the 9 EMA, which is a good indication, right? Then now it's bounded between the 5 and the 9, right? But now here it's still closed above the 9, so that's good. But at the same time, it tells me that there is a lot of pressure pushing it down, as we will see later on. All right, so before we move forward and start to talk about this level here, see here how the 5 EMA is actually forming that resistance, right? While here, for example, the 50 and the 200 are forming that support line here, right? And then here we have kind of variations of where is the support and resistance are. Resistances are. All right, so before we move here, let's add one more tool. All right, one more chart, and this one is going to be the Fibonacci retracement levels, which we can find here, Fibonacci retracement. And this is my uptrend, so I'm going to actually take it all the way from the downtrend here, or the swing low here, all the way up to the swing high. And let's look at this now. That is very interesting, because if you look here, you will find that that level, all right, the 1.949 is very close to that important level again that we talked about. All right, and that is a 38.2% retracement of Fibonacci, all right, which is important. So if you notice here that when it dropped, it some kind of respected this. When it closed above this or almost at it, which means it respected, it bounced back off of this, and then it went back and dropped again, right? Now, the idea is that it will probably go and touch the 50%, which it actually tested here and got rejected strongly, all right? But then again, we are seeing that there is a little bit of a downtrend, so are we going towards this? And my guess is that we are going to actually test that line, because this line is basically the 50% Fibonacci retracement level, which is not actually part of the Fibonacci, but it's just conventionally added to it, and it's a very important level, the 50%. And then also it's the center line or the median line of that fork line channel, all right, or the fork pitch chart that we have here. All right, so that is very important. It seems to me that we will have to touch here, even if it's for part of the day. It doesn't have to be something that is constant. Like for example, here, if we look at this, we can see that it could test that one and then go back up again. All right, so that's not something that it has to stay at for a while. All right, the other thing is that we can see here also that we have a falling wedge pattern, right? So if you look here and we draw this one, all right, so this is the daily, so it's a little bit inaccurate. Like this is a full day of variations, ups and downs, and we will fix it as we go in a lower time frames. So here, let's put it this way. All right, and let's go to the 4 hours to fix this one. All right, so if we go here, we can see that something like this. All right, and this is touching most of them, which is nice. And then for that one, let's put it this way, and let's put it this way. All right, so that is it's very hard to tell if it's the falling wedge or an actual flag, but we can see here that this is the pattern, and we are almost breaking out of this. So that's why I'm a little bit hesitant about saying that we are going to really drop significantly, but at the same time, because this is confusing. It's at the center line, so it could basically bounce off the center line, or it could break below it a little bit. So that's why it's like if you are at the edges, it's easy. You can tell that I'm going to fall from here, right? I'm going back towards the center line. I'm going back towards the center line. But now that you are at the center line or the median, how do you know? Right? So that's the tricky part, and there are several possibilities. So for the possibilities that we are seeing here, we can see that if it drops, then we are seeing the significant level here of the 1.66, which is the Fibonacci 50%. And if it rises, then we are seeing the first resistance, which is the 1.9, that significant resistance, right? Then we are seeing, which also aligns very closely with the 38.2% of Fibonacci. All right, so that's why it tells me this is a strong resistance level. Then we have the upper resistance, or the inner resistance of the fork pitch chart, which is here, and I'm very close to actually that Fibonacci level. But then if it spikes, then I'm watching it at that level. All right, because of that trend, I can manage my expectations. I'm not going to say, oh, it's going to the moon, it's going to fly, which could happen. Could be that is when it breaks out of that channel and forms a completely new channel. But at the same time, I manage my expectations and I know what levels I should be looking at. All right, so here I'm looking at some kind of resistance or strong resistance here. All right, and if it breaks and holds, then I know that this channel is now void. This channel is broken, right? If it holds for a couple of days, because notice here that it went through that resistance, but then it dropped back in. All right, so that here tells me this is a level that I need to be careful with. So if I'm swinging, I would be careful and say, okay, if I'm here, I'm going to reduce my position, sell a little bit and lock in some profit, and if not, then I can possibly leave it or let it run if it goes beyond this, right? And also at the same time, if it drops here, I know that this is a level where I should buy or add, or buy the dip or add more, whatever you want to call it, whatever your situation is. And then in this case, you will be able to know where are the lows, where are the highs. So that's the good thing about it. All right, so that is another level that we are using, or indicator that we are using, right? Another indicator that you could look at, which doesn't really tell much because we are seeing the uptrend. So the super trend indicator is going to just tell us that you know what, it's going up, right? So that's what we are basically seeing here. So let me remove the other indicators so we can see here. Now another interesting thing here is that level, this is the green one here, this is the super trend, and when it's green, this is an indication of buying. When it's green, this means it's moving up. But then that's very interesting because now it's actually with the 50% Fibonacci level. All right, so now this is the third chart or indication that actually tells us this is a level that is going to be a very good resistance, support, right? As we can see here, this is strong rejection here in the price. All right, another thing that I also add to my charts is the bands here, and here we can see that we are actually in an expansion, and that is we went above the upper band, and then we are retracing now. Nothing says that we have to go down all the way to the medium or the basis band, and actually the basis band with time could go all the way up and becomes a support here, and then we can go all the way back up again. All right, so that doesn't mean, because many people say like we are going to drop all the way back to 1, all right, or 1.3. It's possible, here this is the lower band is 1.3. But also, even though I don't want to talk about the fundamentals of the company, but keep in mind that we are in anticipation of several contracts, and the most important thing is the financing contract from Citigroup, which is supposed to help Gevo build its own or build the facilities to produce and deliver to the contracts that it has lined up so far. So that is anticipated to be during the rest of this month or early in January, right? So somewhere here. So it's very possible that this news is going to make it spike before it gets to these lower levels. All right, so I'm seeing that level here is very strong, and maybe I'm expecting it to bounce off the median line. All right, another thing also that I wanted to mention is that by the end of this year, by end of December, we are also expecting another news of becoming debt-free for the company. So in this case, when the company becomes debt-free, that's also going to maybe add to the fundamental basis here, or the fundamental cushion that is supporting that price and hopefully moving the price higher. So in conclusion, I think it's going to slightly drop, all right, and then it's going to go up. That's my expectation. It could go up all the way to this level here, and then maybe even break out of this, which is possible, right? That's possible. If it breaks out without dropping, that's even better, because I would be happy to be wrong here, because it means we are gaining more, right? So that's the nice thing. So that's basically my analysis as of December 6th of 2020 for Gevo Inc.